Welcome back to the channel, guys. In this video, we're taking a look at some coins on my watch list during the month of February for varying reasons, which we'll discuss in this video. I've got 3 picks for you: Solana, LuxRare, and Trader Joe over on AVAX. If you enjoy the content, make sure you subscribe to the channel and check out the pinned comment down below to join us over on Patreon. We do 2 Zoom sessions per month. So starting here with the Bitcoin chart, of course, we have to check in with Big Daddy BTC to make sure things are looking all right, kind of healthy going forward, to ensure that if we do make any purchases, we're not going to get rugged imminently. However, there is of course a huge risk factor here because Bitcoin has been rather unpredictable as of late. But as you can see from this ascending line here, we are charting away upwards and we are starting to see some more bullish momentum in the markets here. We've utilized this kind of support region down here to develop a nice basis from which to launch up. And now it looks like we should be teleporting towards this kind of 41 to 44K region over the coming week. This is my kind of outlook, and this is confluent with some other TA experts that I follow quite regularly. So I would expect us to close this gap and move towards this kind of region in here. Anything higher than that is just hopium at this point, but you will see that once we enter into this kind of region in the mid 40s, everyone is going to flip super bullish, but there is going to be a large amount of resistance around this level, and I would expect we do get a rejection. This will be a point in time where I will start to make some amendments to my portfolio, taking some risk off certain assets that I no longer have as much conviction in and reallocating to a more focused portfolio allocation going into 2022, following some of the key narratives that I truly believe in. So BTC slowly grinding its way up. As TradingView announces to us over here, US stocks seesaw their way to a third day of gains. As we know, high correlation between the stock markets and crypto right now, but as long as those guys over on Wall Street are having a good time, so can we. Now over on CoinShares, they post this. This is the weekly asset flows. So this is institutional purchasing of crypto. So as we can see from this chart is showing us quite a lot of negative, which is outflows from the crypto scene from these asset managers. The total over this last week, though, has been a net positive of around $18.9 million. But as you can see, the month today is minus $232 million. So institutional adoption of crypto in Q1 has not yet happened. We are starting to see some movement into Bitcoin, though, over this last week, and also these kind of multi-assets, which are essentially index funds of various baskets of cryptos, doing a lot better than straight asset allocations, the likes of Ethereum taking another big hit here, Solana and Polkadot also down quite considerably. So very interesting to check in on this data to understand where the institutional money is going. And as you can see, it's not super bullish for crypto right now. Hence, we are on a lower high watch and are still in a very much bearish market structure on the macro right now. So the first coin here is going to be Solana. Now, some really good news coming out of Solana as of the last 24 hours, which we'll dive into. Now, this is on my watch list for a long-term hold, something I want to DCA into and have a bag of for the future. I see this as a real ETH competitor, even though with outages as of late, not very good for their reputation. But in the long run, I'm sure they will sort things out. There's a lot of human capital behind this, a lot of smart minds, including the FTX team, etc. And I think that this one will be a multiple $1,000 coin in the not too distant future. Hence, it's a good idea to accumulate during the lows. So currently we're at a price point of around 110 bucks. We had a huge run up to 260 bucks at its peak and came down all the way to around $80 here as of just the last fortnight. And you can see that ties in with a previous high we posted back in August. So this acted as a nice area of support by here. But if we do break further to the downside for Bitcoin in another corrective phase, we're starting to look at these areas down here towards the $50 region and even as low as around $25. This was a large period of accumulation throughout April, May, June, and even July here for the Solana token. So this is a region I would be looking to heavily accumulate Solana within if we do get there. If we don't, then this is on the DCA dollar cost average list throughout the year of 2022 and beyond nevertheless. So let's take a look at the fundamental bullish news here. So this from Jeremy Allaire. He runs Circle, i.e. USDC. So instant merchant focused payments experience with USDC on Solana with Solana Pay. So Solana Pay has just been released, an open toolkit for anyone to enable USDC payments that settle in less than a second with a transaction cost of less than a cent. So this blows out the likes of Visa, etc., which charge a high percentage fee and also don't settle all that instantly straight to merchants' accounts. And so this provides a great benefit to utilizing Solana for merchants. So Solana is truly the blockchain that could be a settlement layer due to the fact it has very quick finality. I think it's around 0.6 of a second. So as Blockworks post here, Solana Pay connects merchants and consumers via stable coin payments. Has plural in there, but the talk is all around USDC for now. Solana Pay will focus on providing online and point of sales via a software development kit for merchants to leverage Solana's network for plug and pay services. So this could be easily utilized by merchants with the adoption of crypto. So as society becomes even more digitized, growing use for digital payments and crypto payments for settlement is going to become more and more obvious. And this was a recent poll here. 59% surveyed actually said they plan to use digital only payments within the next 2 years. And of course, the quickest payment rails are going to be stablecoins on the likes of Solana here. So this is an article posted by Circle itself. At launch, Solana Pay will enable near instant settlement at near zero cost for USDC. And this will unlock access to over $4 billion in USDC currently sat on the Solana blockchain and more than 49 billion across the entire digital asset market as of February the 1st, 2022. Merchants can settle and store the USDC in their Circle account. So a caveat to this, they're going to need a Circle account here. From there, they can then manage payments and treasury operations, convert funds back to fiat via traditional bank accounts, and send USDC on-chain via a growing list of the world's leading blockchains. Then qualified users can also get USDC yield via the Circle Yield application. So a potential for merchants to further store their profits in an interest-bearing account that will get single-digit APR. So I think this is a very tantalizing new option to all merchants across the globe who are looking to utilize cryptocurrency payments. And I think as we see more regulatory clarity around stablecoins in general, this will be something a lot of people will jump on board with. In the short term, I think it's easy to over-exacerbate how big this can be, and clearly the adoption of this will take a lot of time, but in the long run, this is the kind of thing that the payment rails of the future will be built upon. So Jeremy himself finishes off here, the launch of Solana Pay is a critical step towards broadening access and usage for merchants and customers who want faster, more efficient payment options for everyday commerce. So second on the watch list here is going to be Trader Joe over on the Avalanche ecosystem. So Avalanche itself, interestingly enough, has a token unlock for pre-sale investors, which I want to highlight in this video. So they had an initial investment round raised back in July of 2020, and the 1.5-year unlock ends in March. So on the 4th of March of this year, there was a final 15% release of these tokens from option A2. This was a total of 60 million tokens, 15% of which will be 9 million AVAX released on the 4th of March. So even if you are highly interested in the Joe token here, do be aware of that due to the fact we see oftentimes when the overall ecosystem token, for example, AVAX, takes a dump, the rest of the ecosystem goes with it. They can't typically sustain a price pump on their own without the overall ecosystem token also having some bullish posturing. So 4th of March may be a date to keep in mind. It's certainly one I'm going to be thinking about going forward here. But the Joe token currently trading at $1.46. The market cap is 238 million, a TVL of $1.2 billion on there. And they're moving from a highly inflationary kind of farm and dump token, it's been seen as for quite some time here. They're mixing up their tokenomics, which we're going to go through, which is very interesting. They will lower the amount of emissions, try and turn this from a more farm and dump into a more sustainable tokenomics model. And I think in general, this could be very good for Trader Joe in the long run. Here's the price chart. You can see it is very, very volatile. But as you can see, any swing traders are probably highly interested in this asset. But let's jump into the reason why I'm bullish on this. So tokenomics overhaul, staking V2 as it's called. The high level TLDR here, there's going to be RJO, which is called Rocket Joe, launching on the 1st of February. Like an initial launchpad offering, so staking RJO gets you into those launchpads. They then have SJO, like a staking Joe, a platform revenue share feature where you can earn stable coin rewards. So this is the one I'm particularly interested in. And then of course VE-Joe, Vote Escrow Joe, which is for Joe farm boosts and governance. So very similar to the Curve tokenomics there, which we've discussed a few times on this channel. Go and check out those videos. So XJO is the current staking model, and this will be replaced by SJO, and both SJO and VE-Joe will be deployed around mid-February. So this is not yet out. So a quick run through of these new tokenomics designs. I'm not going to go through RJO, Rocket Joe, or VE-Joe, but I will leave the document down below. So do go ahead and give that a read. But the one I'm particularly interested in is SJO. I'm interested in revenue producing assets here. So SJO is for the stablecoin enjoyers, as they say. Users can stake Joe into SJO and share the revenue generated by the platform, and the rewards are paid out in stable coins. So this means you can park your funds, and instead of being given the underlying token back, which is not often very good, especially in a down market, you don't want to be receiving more and more Joe if everything's going down. People are just going to be dumping it, and you get a bit of a death spiral. But getting paid in stable coins, well, who doesn't want stable coins? We all denominate our prices in dollars, and so getting paid in dollars is very nice indeed. So you'll receive stablecoin rewards. You can also harvest your rewards at any time, very similar to a yield farm. Of course, every time you harvest, that will be a taxable event. There are no fees to unstake from SJO, but there is, however, a deposit fee that will scale up to a maximum of 3%. So you'll want to watch for that. If it is highly oversubscribed, they will bump up that deposit fee all the way to 3%. So this is to try and disincentivize too many people getting into that pool. And that deposit fee is paid in the Joe token and distributed to the existing SJO stakers. So quite a radical tokenomics design from the previous XJO model, which is now being deprecated and replaced by SJO here in the middle of Feb. So what we can see from this is currently there's $98 million worth of Joe stake. This is under the XJO model right now, but we can still utilize some of these stats to maybe make some projections here. The current fees are 115K. So based on current volumes, around $115,000 per day is generated in fees. Now we need to bear in mind a few things here. So the total amount of Joe staked currently is under the premise that there's just the one staking model, XJO. So they're moving to a more complex tokenomics design with RJO, SJO, and VE-Joe. So there'll be 3 different portals in which you can stake. So I don't believe they will get all the coins that want to be staked into the one pool. So we may have a better distribution for those who want to receive the stablecoin and fee rewards here. I'm sure there'll be a lot of protocols that want to start to direct the Joe rewards via the VE-Joe staking module, and likewise there'll be participants who want to get involved with upcoming launches via RJO. But on the basis, if they can continue with this kind of fee model, going towards the SJO stakers and receiving these stablecoins instead, that would be over $3 billion per month. Of course, we're going to have to wait for this to fully roll out and then analyze this once again. But this really did strike hot on my radar when I saw this, because getting paid in stablecoins is something I'm certainly very much interested in, and I'm sure many of you at home will be as well. So more to come on this as we find out more and as it gets rolled out. But on first glance, this does look very good. Then third up here on the watch list, we have Lux Rare. This is a token I got some of in an airdrop, and one I will look to add to either via staking, trading, or just purchasing some more, as this is in the highest growing sector of crypto, the NFT sector. And of course, marketplaces can do exceptionally well here. We have OpenSea, the dominant force, but that isn't set in stone forever, and I think Lux Rare is providing a very good vampire attack at this point and getting a lot of people onboarded. The market cap after less than a month of launch is still over $1 billion, pretty epic stuff here, and they have already amassed more than 50,000 regular users on the platform. If we just look at the chart here, it looks pretty damn bullish to me. And coming off the back of that dump around the 21st of January here, we start to put in some nice higher lows on the way up and higher highs as we're going. And if we can take out this previous all-time high at around the $7 region, I think this will really go off to the races. So a few people have asked, how is the staking going over here? Well, I had on this one account 400 Lux tokens in an airdrop, and I've been staking them for around 2.5 weeks at this point, I think it is. And so the 400 tokens I received have been auto compound staking at an APR of around 200 to 300%, depending on the amount of Lux being currently staked. It does vary on a day-to-day basis, but I've accrued 89 tokens, and these are just auto compounding. And the more Lux tokens you have, the greater the share of the rewards you're going to get, which are paid in wrapped Ethereum. And just over 2 weeks in here, I've already received 0.179, pretty much 18% of an ETH in trading rewards, worth around $500. Now, I don't have any other asset in my portfolio that I can stake and earn Ethereum in. And I think in terms of the cryptocurrencies on offer out there, getting paid in either Bitcoin or ETH have to be the number one and number two options for anyone with a long-term time horizon here. We know that these assets are going to go up over time. They've got the network effects, they've got Lindy, and they are going to outperform fiat currencies by a mile. So being paid in ETH is a hell of a reason to continue staking this and wanting to accumulate more of the Lux tokens. So as things stand, I am super happy with how this is going, and I would expect other investors likewise are watching their wrapped Ethereum balance keep going up and are thinking to themselves, I don't really want to sell this, I want to accumulate some more. So just yesterday they hit a new all-time high for fees. They took around 7,230 wrapped Ethereum, around $20 million in fees, and they distributed 2.86 million Lux, around $14 million at that time. So this really is shaping up to be a very productive asset for holders. Now, Geordie Alexander put together a very nice thread on Lux Rare and the Vampire Attack. We'll just go through a quick TLDR of this. Geordie is a very smart individual and has been on Up Only TV. Now, in this, he talks about the airdrop and how this team of Anons have managed to take on over 50,000 consumers at this point and started to really mount a serious competition for OpenSea. And as we know, OpenSea is valued around $13 billion, and yet it has not actually cemented itself as the behemoth in the industry. And that's because we haven't really got a giant as of yet. We haven't got the kind of Facebook moment because there's not that many users here in NFT land. We are still super early. So as he points out, it's a lot easier when we have tens of thousands of NFT users to set up a new dominant exchange. Whereas when you've got like a Facebook movement with over 2 billion people, it's really hard to sell the new upcoming version of Facebook. And what does LuxRare have in favor of OpenSea? Well, OpenSea is going to be regulated, and so they can't really embrace the full ethos of Web 2.0 and community ownership, whereas LuxRare have done so. They've distributed a token in a very fair manner, and so those who utilize the platform have co-ownership and take a share of the profits. They're not going to the VCs and the owners like on OpenSea. Further to this, the incentivization of the Lux token to get people to actually start trading is pretty much, as he puts it, a secret weapon and makes for a very easy choice for those who want to trade their NFTs. Do you want to get rewarded over on Lux, or do you not want to get rewarded at all, i.e. OpenSea's model? Well, most people are opting to get a payout in the Lux token by moving their trading over to LuxRare. So currently dropping 2.8 million tokens per day, roughly around $10 to $13 million worth, depending on the price point. Well, as he says, a lot of people aren't just dumping these tokens because they're getting those wrapped Ethereum rewards. It doesn't make a whole lot of sense as you're incentivized to continue staking, because most people in this industry want ETH. So there's quite a bit of yield farming going on at this moment in time. The more you can trade, even if it is just wash trading, the more Lux tokens you'll get. It's essentially yield farming. And this makes a lot of sense as a marketing tool for LuxRare, because with a $13 billion valuation of OpenSea, well, just to get a slice of that pie is going to be worth an absolute fortune. So as Geordie summarizes, the power of game theory is being used to drive individual user level behaviors, which collectively might lead to an innovative disruption of a $13 billion regulated giant. And a community-owned solution is better for everyone except the OpenSea VCs. So just going through my watch list during this next month to see how things are shaping up for these various cryptocurrencies. Drop me a comment down below which of these is your favorite, which of these are you currently holding and why, and I will see you guys in the next video. Goodbye.